How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on Euro versus US dollar. As you can see today on Friday, we had NFP, big news event at the end of the week. Price is still looking to take out what? Previous daily highs or swing high formations are targeting or drawing towards buy side liquidity. As you can see, that short-term buy side liquidity that we mentioned in the last episode, we got there yesterday. And we'll look to see how we would be able to be profitable using my simple model techniques during London and New York for NFP. Let's take a look. So we go down to the 15-minute time frame. We're going to start off with the London session first, and then we'll talk about the New York session. So you got Asian, London, and New York session. You can see the draw is clearly to the upside. There was a purge on sell side here, and there was definitely a purge too during London session on sell side. Let's talk about each one of these kill zones. If we're going to be trading the London session, we're going to be utilizing the dead zone between midnight, so here, and 2 a.m. That's what we're going to be utilizing. We cannot be using anything else. We normally just like to use 2 a.m., midnight to 2 a.m. We are going to use that for 2 a.m. to 5 a.m. to kill zone. So this is the Asian lunch, and this is the London session. We're going to be looking for the 15-minute swing highs and swing lows, as always. That's sell side liquidity. And we can see this is buy side liquidity. But since we are bullish, we are not really looking for the sell opportunities. We're looking for the buy opportunities. You can see price does come up and take out this buy side liquidity above this swing high. There may be a short opportunity here, but that's not what I'm focusing on. If you want to do your homework there, you can too. There might have been, and most definitely was a short opportunity somewhere above the London opening price. So we're going to mark this out. This is the opening price. Anything above this price point of 2 a.m. is going to be a premium. Anything below it is a discount. If we're looking for the draw or the weekly draw to go higher, we want to see counterparty liquidity pool taken out day by day. So we want to see counterparty sell side liquidity pool taken out because we're looking for price action to go higher. So we need sell side to be rated for us to find longs or sponsorships to go higher, not buy side taken out looking for longs. We're not really looking for a break retest. And my premise and my ideology, I rather see a false break occur. I love the turtle soup setups. Let's play it forward. You can see instantly, right? Price drops down really quickly. This will cause a lot of retail traders to chase price. FOMO starts to kick in. But for you guys, I know you guys are informed and you guys will not chase candles. Just because you see it dropping doesn't mean you have to get into the market. The market is always constantly moving, but you're not always going to be in every single play. After that, we'll stalk the 1 minute time frame because we rated sell side liquidity pool and we're below 2 a.m.'s opening price. Not to mention, we're also below the Asian session low and we're also below midnight opening price. So where's midnight at? Midnight's right here. So you can see we're below that. So we're at a discount for the kill zone and we're at a discount for midnight opening price and we're below the Asian session low. These are all characteristics to a high quality buying opportunity. Plus the higher time frame trend is telling us that it's bullish. We're in a bullish trend. We're going to stalk the 1 minute time frame for the simple entry technique. We're looking for a fair value gap that runs through a swing high, and that swing high is inside that fair value gap. Let's see where we get that. Let's play it forward. There it is. You can see that's the fair value gap. That has a swing point within it. It runs through the swing point, and that swing point is inside the fair value gap. What will we do here? Same idea. I'm looking for a one-to-one scenario. I like to base everything from a one-to-one scenario because the opportunity can be ultimately endless or unlimited. It could turn from a 10-to-1. And you guys saw that last night with the UJ agent session model going into NFP. It went from a 1-to-1 to basically a 10-to-1 right now. This would be the idea. We'll play it forward. You see, we're below 2 a.m.'s opening price. And we'll hold. We know that we're going to endure some drawdown. That's the whole point why we use a 15 pip stop. Now, going into the next session, we could still be holding this. We're not looking to collapse the trade because we believe in the trade. We're not going to stare cross course, sorry, of our trade idea. We're going to stay on that path. We're not going to just close out and say, you know what, this trade sucks. At times, you will be in drawdown for a long period of time, which isn't the best feeling ever, but you got to have that emotional and psychological discipline. Because going into the New York session, so the same idea and the same premise, we're going to be using 5 a.m. to 7 a.m. That's going to be our London lunch session. So notice we're using dead zones to frame liquidity pools to find an entry technique. So we're going to go down to the 15, go back up to the 15-minute time frame. And we're going to find all our buy side and sell side liquidity pools. So we have this as sell side because that's a swing low formation. We also have this as a swing low formation. We have this as a swing high. So that's the only buy side liquidity pool we have. We got the opening price for the New York session here. That's 7 a.m. Same ideology applies to the New York session. Anything above is a premium. Anything below is a discount. If we're looking for longs, we want to see sell side taken out. We're not looking for a break retest of buy side. We want to see sell side rated and price going higher. I favor the turtle soups because it's more ideal. You're buying at a cheaper price. I don't really want to break retest because I'll be buying at higher prices. I like to buy low. And that's only going to happen after breaking lows or rating sell side liquidity, getting retail traders to chase shorts. Play it forward. We see price starts to sell off. At this point, price breaking at 15-minute swing low, we're going to hunt long opportunities and find an entry on the 1-minute time frame. Let's play it forward because I know it continues to run. Take a look and see where we have a fair value gap that runs through a swing high right here. Notice the entry technique that's forming is below 7 a.m.'s opening price. Here, here. Fair value gap. Look at this. The swing point. Zoom in for those that can't see. I know I'm blind. There goes the fair value gap. There goes the swing point. The swing point is inside the fair value gap. I'll say that again. The swing point is inside the fair value gap. One more time for those that can't hear me. The swing point, the swing high for the buy setup, the entry technique, the swing high is inside the fair value gap. That's the entry. Going long here. Let's say you didn't risk all your percentage, your max percentage during London, and you still have more to risk for the day. So let's say we're looking for that. Or let's say you don't trade London and you just wanted to trade New York and this is your first time trading. Either or, you're going to see how both models still produce a great opportunity for NFP today. Let's play it forward. You know, that news event is going to come in, and what is it going to do? It's going to get traders on the wrong side. And then price takes off. So profit taking, buy side hit, price running up and taking out the previous daily high. This is where we are currently in price. Now, if we can see that EU is currently moving higher, we more than likely know that the DXY went lower, UJ went lower, EJ, CADJ, GJ all went lower. All the other majors crossed with the dollar most likely went higher. Let's just take a look. NU up. And I'm not even watching NU that closely. I just know based on what EU did, NU is most likely doing the same thing. UCAD going down, right? There was a fake move to the upside and then a decline. AJ going down because when dollar goes down, yen increases in strength. So we're going to see the yen crosses go down most likely. UJ selling off. Fake move up, run all the buy stops, and then sell off. NJ, a little more choppier. You can always assume that everything's not going to be picture perfect. CADJ run up, runs down. Let's take a look at what the Japanese yen did. That's something I didn't take a look at today. Let's go into daily, and it's running higher. From the last time we talked about this, it's still going higher. It just ran into what? The IPTA look back, 40-day low and 60-day low. And it's still looking to push higher. I do want to see some type of retracement come in because it's definitely overdue. A lot of currencies and a lot of futures have been running in one direction really strong. Sooner or later, we will get a retracement. But as you can see, the markets are doing some funny things right now in all asset classes right now. A lot of things are very volatile. Things are tearing. Large range cycles are just kicking off day to day, back to back to back. Sooner or later, we will go back into a small range cycle. It's inevitable. The market is going to have to build up buy stop orders and sell stop orders, which is market sentiment, and then get a lot of retail traders thinking to themselves, should I be long or should I be short? Eventually, you will see that small range cycle broken out and a large range cycle is going to kick back in. You can see here for the yen, this was a small range cycle for a very long time. And then finally, the switch flips, large range cycle, we're gone again. So it's a constant flow. It's a natural price action cycle, small to large, large to small. And if we take a look at the DXY, DXY just selling. Since the start of March, just selling off. Still looking to see if we're going to get some type of pullback and then price is going to go lower. Same thing for EU. I want to see if we're going to get a pullback anywhere along the lines of the IPTA levels and then price going higher potentially. That's what I like to see. Right now, this ideology that we're talking about, this method that I have, waiting for a higher swing low to form, hasn't shown yet. It is what it is. So what are we going to do? We just wait. And in situations like this, we would either go in intraday and find small opportunities. Let's look for 10 pips. Let's look for 15 pips in the direction of the market. We've shown that consistently for the entire week. Finding some type of buy setup in London or New York using my simple model ideas of using the dead zones. Hopefully this was insightful. See you next week. Peace.